In a recent statement, Mazhar Mohammed Saleh, the economic affairs advisor to Iraqi Prime Minister Mohammed Shia al-Sudani, highlighted a critical issue in Iraq's banking system. Saleh described the system as rentier par excellence. But what exactly does that mean, and why does it matter? Let's break it down. The term rentier refers to an economy heavily reliant on income from natural resources, like oil, rather than on a diversified and productive economy. In Iraq's case, the banking system plays a supporting role in this rentier structure, with much of the country's wealth tied to oil revenues. This dependency has limited the development of other sectors, including a robust and modern banking infrastructure that could serve as the backbone of a more diversified economy. Saleh's use of the term rentier par excellence means that Iraq's banking system has fully embraced this model, to its detriment. Rather than serving as a dynamic and innovative force in the economy, the banking system has become static, overly reliant on oil revenues, and disconnected from global financial trends. This is a problem because in today's globalized world, a country's financial institutions must be competitive and interconnected with the international banking system in order to attract investment and stimulate economic growth. Iraq's current banking structure is not designed to do that effectively. Now, why is reform so critical? Saleh stressed that a comprehensive reform process is needed to overhaul the banking system and integrate it with the international financial and banking system. This means going beyond just updating the technology or modernizing some services. It requires a fundamental shift in how the banking sector operates, transforming it from a static, oil revenue-dependent system into a dynamic, market-based institution. Such reform would involve the creation of market institutions, which Saleh pointed out as being key to enabling Iraq's banking market to not only function efficiently, but also attract global financial institutions. Global banks are unlikely to invest in or work with Iraq's current system because it lacks the necessary transparency, regulatory framework, and financial infrastructure. By creating a more modern, market-oriented system, Iraq can become more attractive to these banks, opening the door for significant international investment. This is where integration with the global financial system comes in. Once Iraq's banking system is reformed, it can better align itself with international standards, making it easier for foreign banks to do business in the country. This will not only help Iraq diversify its economy beyond oil, but also create a more stable and resilient financial sector capable of weathering the ups and downs of global oil prices. The ultimate goal of these reforms is to create a banking system that supports economic growth and diversification. For too long, Iraq's economy has been stuck in a cycle of dependency on oil revenues, leaving it vulnerable to external shocks, like fluctuations in global oil prices. A modern banking system integrated with international markets could help cushion the economy from these shocks and provide new opportunities for businesses and individuals alike. In summary, Mazhar Mohammed Saleh's call for comprehensive reform isn't just about fixing a broken banking system. It's about reshaping Iraq's entire economic future. By creating a market-based banking sector that is attractive to global banks, Iraq can take a significant step towards becoming a more diversified, resilient, and prosperous economy.